Hello trade lines, this is Gene, and today I'm going to update our analysis on the Bitcoin DAO and Ethereum DAO pairs. So if you've been following our studies, stay tuned. There's something new in today's video. Let's get started. Here in the video on the screen, I have a daily chart. So this is the daily chart showing its movement. This area here around November 2021 marks the end of the last bull cycle. And from there, the entire downward movement continued until November 2022. So looking at it as a macro movement, we can understand that this is the starting point, the start of the major buying wave. In other words, probably a cycle that will last more than a year, maybe more than 2 years of upward movement. So what happens then? This movement here from November 2022, in theory, is now reaching the halfway point of the period. It was 2 years, so we would still tend to have another 2 years. Looking at it as what? Looking at it as Elliot, as the movement of a wave going up, then a run, then another wave going up, fourth run, fifth wave in a bullish trend. And all of this here is one big main wave. So for us, everything is very, very focused on that. If you don't know about Elliot waves, that's fine. In our study group, I have total freedom to answer questions. So if you join, just reach out to me, send a message either here on YouTube or on Instagram at trendlines, and we'll study together in the WhatsApp group. So stay tuned to the screen. The upward movement has already happened. Then comes the corrective move. And from March 2024 until now, August 2024, we've had a corrective wave. And starting in August, which is this region here, we have the beginning of a major buying movement. So here, this is the buying movement. I could work in other ways. I'm going to pull up the 4-hour chart here. And we can see that at the end of a selling wave, the market made a top at 64.65. It's very important to remember this region, which is a natural support. Then the market corrected. And now there's a big buying wave. So how would this look with Elliot? Let's now analyze it based on Elliot. I could very well say the following. Look, this movement here. And here, this is a big wave 3. There would also be no difficulty in making this move here. And here it's in the last buying wave and would probably push the market above $100,000. So it's a Fibonacci extension. I go to the end, go to the top, and come here. What am I going to notice? Regardless of who does the reading, 1, 2, 3, 4, 5, or that 1, 2, 3, the market is still projecting a test of $100,000 and something above $100,000. So from one perspective, I see the market projecting $100,000 and extending up to the region of 104. From another perspective, I see the market projecting $100,000 and then 120. So as I mentioned, I'm not here in the ETF section to predict what will happen. I have no way of predicting what will happen. So what am I going to work with? Probabilities, scenarios to prepare myself for each type of scenario. So I've already understood that the main movement is upward. Look at the moving averages here, all aligned with a bullish bias. The main movement is upward. That being said, if this final movement here ends up correcting, is that what I believe will happen? No, I believe the market will still break through here and go close to 100,000. But could it correct? It could correct. What would be a target? Around the 80,000 region. And how would I work this market? From the moment the market starts to fall, I will selling a portion of the asset I've already bought. It's worth mentioning that there's a video the best trade of your life, where I buy and show how much I bought. During the US election live stream, I did a new trade and showed the structure again. The structure is still active, so it's also worth checking out. And what do I say? I work with profit taking, so I keep selling here, and as the market keeps falling, I make new purchases. This is also known as a linear gradient. You can set up a gradient with a $2,000 interval, so it's a strategy that I keep developing further. If you have any questions, you can leave a comment or ask in the WhatsApp group as well. It's extremely important. So what happens? I have a target here, 87,000, 83.4, and 80,000. And the target, the strongest one, would be the 78 region. So here is a very good structure so that as the market corrects, we will buy. And for Bitcoin, imagine if it happens to fall. We are in a bull cycle. And this here is very important to understand. And in a significant bull market, I genuinely do not consider this particular 92 region to be the absolute top of the current ongoing bull cycle at all. So for me, it truly doesn't fundamentally matter if the overall market drops from 92 down to 80, then to 72, then further to 68, or even significantly down to 58. It genuinely doesn't make a difference. We're going to confidently call this the established path forward. Because what's important? I genuinely believe that we are still currently in a very strong and robust cycle, and I can pretty much confidently say the following things to you. We still have a lot of room to go up. So it doesn't matter if the market is going to correct now and then go up, or if it's going to go up from here. Our focus should be on the upward movement. So that's the thing. Obviously, knowing how to take profits is extremely important. That's why I say it. Those who caught a really good trade from way down there should start taking partial profits along the way. If the market drops, you have a new opportunity to get in, so you sell and buy again, locking in your capital gains. If the market takes off, you keep selling as the market goes higher. So there's really not much difficulty. It's a market that today is at a medium level of trading. I would even say it's easy. If you just focus on the medium to long term, I don't see much difficulty. I already believe the market will go past 100,000. Remember, my target was 80, so we're already well above that. And for me, it doesn't really matter whether the market corrects down to 80 first or goes straight to 100,000. Why? Because my focus is on the bull market. So that's the point I think it's important for us to pay attention to. Then I shift a bit to what? To Ethereum. And with Ethereum, we've already done a buy and sell some time ago. And here we have the daily chart with that spike in the $4,000 region. I really believe that Ethereum will surpass its all-time high. So I clearly see a noticeable delay in Ethereum compared to Bitcoin, which leads me to confidently state the following. At this precise moment, if you're out of the market and actively want to get in, please don't go all in on Bitcoin. Instead, split your investment portfolio and put a significant part of it into Ethereum as well, because I firmly believe Ethereum is very likely to outperform Bitcoin from now on. And if you were to take and remove 3.1 and Bitcoin 90, in terms of returns, the one I believe will give the best return right now is Ethereum. So this detail is very important. Are you out of the market and want to build a portfolio? Take a good look at Ethereum because I believe the return is better. Another thing, if you're not in the crypto market and want to get in now, don't put all your available capital into crypto at once. Keep some cash on hand because there can be times of corrections, and corrections in the crypto market are usually over 10%. So it wouldn't be the end of the world if Bitcoin, which is at 90,000 today, drops to 80, 74 or 72 in 10 days. It wouldn't be the end of the world. It wouldn't be the end of crypto, and it definitely wouldn't be the end of the main upward trend. So it's important that when we look at the numbers saying it went from 90,000 to 70, the trend is over. Now, in the crypto market, this kind of volatility happens, and it happens a lot. So having a plan is essential. So to wrap up, here's today's tip. If you're building your portfolio, if you're entering the market now, take a good look at Ethereum. Probably in the medium and long term, Ethereum's returns will surpass Bitcoin's returns, taking the current price as the starting point. Another tip, don't leave your cash balance at zero. Buy one asset or another, but keep some liquidity in cash so that if the market drops, you can buy the asset at a lower price. And the third point for today, in my opinion, it's much better to focus on the target above 100,000 than to keep trying to guess when it's going to drop. Focus on the target above 100,000, make partial sales. If the market drops, buy back. If the market goes up, make another sale. And with this selling and buying, you'll increase your amount of Bitcoin. You'll increase your firepower without having to add outside capital. So wrapping up today's video, here are these tips. Take all of this with you. If you liked it, give it a like and leave a comment. If you're interested, join our WhatsApp group. Let's go and comment. Stay tuned because in the coming days, we'll have some news here at Trendline. Happy studying and see you in the next video.